I think you put a lot of emphasis on sizing the stocks in your portfolio, but also you've spoken of valuations, you've spoken of margin of safety that you take while constructing your portfolio. So now help us with examples and different scenarios when valuation opportunities do arise, and what are your checks to avoid a possible valuation trap in these scenarios?
Okay. So what I'll do is I'll give you one or two examples, but that doesn't mean I'm trying to promote or put down a certain company, right? It's just for example. So about I think 2.5 years back, I added a lot of ACC cement, ACC Limited in my portfolios which I run. At that point of time, I had an Ultratech also. So what was the view of the cement industry? What was the view of the fund management team, right? Cement is going to grow strongly. So you want to be in companies who can track that growth. The companies who are not going to track that growth because either they have capacity constraints or something, they'll be loosely valued. They'll be valued at a discount. So at that point of time, Ultratech was trading at a significant premium to ACC. The reason was Ultratech will match or even outgrow the industry growth. And ACC, because of capacity constraint, if industry grows so much, ACC will be below the industry growth. So market was valuing these two things differently. Both companies are well run, good management, so balance sheets, no issues. So as we saw the cycle, maybe slowing down, during the COVID time. So the view was what the projection of industry demand was there for cement growth, that was going to come down. So here you were stuck, the view was now the growth is going to come off. So is ACC going to lose market share? No, that's not going to be the case. Whatever production capacity ACC has, they can match it. So, and discounts at more than 30-40% premium, discount to the industry leader. That's when they decided, okay, let's move out a little bit and add more ACC, and absolute levels add more ACC. So that worked out, right? So same cement company, same financials, but in which how the market is perceiving that industry to grow, that drives performances of individual companies. So that ACC, you had the margin of safety in terms of valuations. You had the industry leader trading at a significant premium. Two, the difference in performance was coming down, right? In terms of underperformance in business cycles versus the industry leader. So that's how I try to look at things and identify companies within sectors. And if you get outliers like that, we take benefit out of it.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.